Hello and welcome to Chapter 4 Notes. So in this chapter, we're going to be talking about the closing process. And so in chapters 2 and 3, we talked about the analyzing and reporting and posting. And then we also talked about adjusting journal entries in chapter 3. So now we're going to talk about the closing process. And I think I said this in one of the earlier lecture videos that the first 4 chapters this course are really, really important. They're fundamental. And if you understand these chapters, the rest of the course will just start to make sense. So really spend a lot of time making sure you understand basic journal entries, the accounting equation, adjusting journal entries, why we do adjusting journal entries, and then finally with chapter 4, how to close out our income statement accounts. Okay? So in this lecture video, I'll be giving an overview of the closing process. And so the closing process is an important step. And so what we're going to be doing in the closing process is setting our revenue and expense accounts, our income statement accounts. Remember, our income statement shows us our revenues and expenses. And so we're going to be setting our revenues and expense accounts to a balance of 0. So we're going to reset the balance to 0. So those revenues and expense accounts, rental revenue, consulting revenue, rent expense, supplies expense, insurance expense, have been collecting revenues and expenses over the last accounting period. Remember, the accounting period we're saying is a year. So collecting information for the last year. And what we need to do is we need to set the balance in those accounts to 0. Okay, we need to set the balance of those accounts to 0. The other thing that we need to do is also zero out or give the withdrawals account also a 0 balance. And then we also need to eventually close out our revenues and expenses to a temporary account called income summary. And then we're going to move from income summary to capital. Okay, so if we look at some of these bullet points, just to make sure we touched on all these, we need to reset revenue and expense in our withdrawal accounts to a balance of 0. Okay. And then also that helps summarize the period's revenues and expenses in the income summary account. And that's something we'll talk about quite a bit in this chapter. Okay. So when we think about the steps in the closing process, we're going to identify the accounts that we need for closing, which come from our revenues and expense accounts from our income statement and also our withdrawals. We'll do some journal entries to close out those accounts. And then we'll do a trial balance after we've done the journal entries to close out the accounts to make sure everything still balances. So we need to also define temporary and permanent accounts. So temporary accounts collect out about 1 accounting period. They're also called nominal accounts, and they include all of our income statement accounts such as our consulting revenue, rental revenue, rent expense, insurance expense. It also includes owner withdrawals, and then also our income summary account, Okay, and our income summary account is just a temporary area where we're going to transfer our revenues and expenses to an account called income summary. And then we're going to move the balance in income summary to owner's capital. And then eventually that shows up in equity on the balance sheet. Okay. So our accounts are also they're temporary because they're opened at the start of the period. And they're used to record transactions and then closed at the end of the accounting period. And so the closing process also only applies to our temporary accounts, not to our permanent accounts. So when we're talking about closing accounts, we're talking about closing out our revenue accounts, our expense accounts, and also our withdrawals. Permanent accounts, on the other hand, are generally balance sheet accounts, and then those are not closed. They hold their account balances over multiple accounting periods. So over multiple years. Okay. They hold their accounts over multiple years. All right. So when we look on the next page, recording our closing entries, which is this. So identifying accounts for closing, temporary accounts, not permanent accounts. Those are the accounts that will close. We're going to talk about this step now, recording and posting our journal entries to close out our accounts. And what that involves is we're going to transfer the end of period balances and revenues, expense, and withdrawals to our capital account. Okay. And what we're going to do an intermediate step in order for our revenues and expenses. And we're going to transfer our revenues and expenses to a temporary account called income summary. And we do this just because it's easier, rather than going straight to capital. Sorry, when I hit the pause button here, I apologize for that. Looks like my document camera was going a little crazy there. Now it seems better. Sometimes when I move around too much, it just flips out on me. So I hit the pause button and let it reset. Now we're back. Okay, so what we're going to be doing is transferring the balance in revenue and expense. We're going to be zeroing out our revenue and expense accounts and transferring that balance to income summary. And how do we do that? We're going to do that with the journal entry. And then what we're going to do is we're going to take the balance in income summary and move it to owner's capital. And then how do we do that? We do that with the journal entry. And then we're going to do another journal entry to move the balance, what's left over. When I say balance, I mean what's left over. What's left over in the withdrawals account to capital. And then we're going to do a final journal entry, right? Well, that's actually it. Then what we'll do is also move, may not have said this, but we're going to move income summary to capital. So we're going to move our revenues and expense accounts to income summary. We're going to move income summary to capital, and then we'll move withdrawals to capital. Okay, so withdrawals do not go to income summary. They go straight to our capital account. All right. So I'm going to go ahead and end this lecture video now. Okay. And then we're going to talk about the journal entries for the closing process. So we're going to talk about the journal entries to transfer revenues to income summary, expense accounts to income summary, and then income summary to capital, and then withdrawals to capital. Okay, that will be the next lecture video. Okay, thanks so much.